the crucial lawsuit between the U.S. Securities and Exchange Commission and Ripple to decide whether the XRP, the world's 7th largest crypto, is a security or not, is awaiting the court's ruling around the summary judgment. However, XRP holders' lawyer has dropped what could be the biggest danger to Ripple in the lawsuit. John Deaton, amicus curiae in the XRP lawsuit, disregarded the opinion that an appellate decision can be a much bigger deal than a district judge's decision. He mentioned that the LBRY lawsuit ruling wasn't a big deal in regard to the XRP lawsuit. Welcome to XRP Insider. We provide the latest news of XRP Ripple. To stay updated with exciting news, please do like, share, and subscribe to our channel. To know more, please watch till the end. He added that Judge Torres' ruling in the Ripple lawsuit will create a huge impact practically and politically. For instance, if the judgment goes in the favor of the SEC, then Gary Gensler's regulation by enforcement will gain credibility. However, people outside the crypto industry might not see much difference. However, if Ripple secures a win here, then this will end the SEC chair's campaign here. The judge might criticize the theory that the token itself from the beginning of time is always a security, no matter who sells it. Meanwhile, Deaton draws a possibility that Judge Torres could rule that Ripple, at some point, offered unregistered security, but the token itself is not, nor they are secondary market sales independent of Ripple. He termed this ruling as the biggest danger to Ripple, as an application of the law doesn't focus only on sales. Deaton highlighted that a sale or transfer of the underlying asset doesn't have to occur for a company to be liable. However, if there's an oral argument, then the SEC lawyer would be focusing a lot on the offering. The growing uncertainties surrounding the legal battle between Ripple and the United States Securities and Exchange Commission will likely contribute to rising volatility for XRP. This volatility could see the asset eclipse the 40-cent zone or slip to 35 cents depending on whose favor subsequent rulings fall. XRP has been in a consolidation phase since the beginning of the month, as price movements and on-chain metrics gradually slipped to the bearish territory, with the asset losing 4 out of the last 5 sessions. The Crypto Basic highlighted the possibility of consolidation below the 40-cent zone following the reply briefs from the SEC and Ripple as uncertainties abound. On December 2nd, defense lawyer James Fillon published a redacted version of Ripple's reply brief to the SEC's opposition to its summary judgment motion. The reply argues that the regulatory watchdog confirmed, in its brief, that it can neither prove an investment of money or a common enterprise. With both parties having filed their reply briefs, the XRP camp and the broader cryptocurrency community are anticipating updates on the case, as the next court date is slated for December 22nd. Due to the lack of any significant report, XRP's price trajectory has been influenced by the rising uncertainty, contributing to building volatility that has shown bearish signs. With the SEC yet to make a move for settlement, the positive sentiments built on the reply briefs have been put on hold, with investor apprehension building up. This has contributed to XRP's slip below 39 cents. However, expectations of an SEC settlement could be satisfied if the watchdog feels the case is leaning more toward Ripple's favor. This is our final submission where we ask the court to grant judgment in our favor. After 2 long years, Ripple is proud of the defense we've mounted on behalf of the entire crypto industry. We have always played it straight with the court. Can't say the same for our adversary. Ripple's general counsel, Stuart Alderati, remarked last Friday, speaking on the reply briefs. During a recent episode of Mad Money, longtime CNBC host Jim Cramer said that he expected altcoins of the likes of XRP, Cardano, and Dogecoin to possibly collapse to zero. The Superstar TV host has warned investors that it is not too late to dump their cryptocurrency holdings despite declining cryptocurrency prices. The stockpicker believes that the top cryptocurrencies are still severely overvalued, which is why those who continue to hold them found themselves in an awful position. The longtime Mad Money host also took aim at Tether, the world's largest stablecoin, questioning the company's USDT reserve backing. Cramer says that crypto enthusiasts are desperately attempting to keep things up in the air, comparing the current state of the crypto industry to the dot-com bubble. Even though cryptocurrency boosters tend to scoff at Cramer's statements, he accurately predicted that cryptocurrencies had more room to fall in June. Back then, his bearish thesis revolved around the idea that the Federal Reserve was going to immolate crypto with interest rate hikes. Following the collapse of the FTX exchange, the outlook for crypto has become even more dire despite the fact that inflation appears to have peaked. Still, Bitcoin is yet to drop to Cramer's bearish target of $12,000. The largest cryptocurrency is currently trading slightly above the $17,000 level after dropping to a multi-year low of $15,479 on NOV21. As reported by Today, Eric Robertson, the head strategist of Standard Chartered, recently predicted that Bitcoin could plunge to $5,000 in 2023. Over the past 2 years, several cryptocurrency experts have commented on the lawsuit between Ripple and the Securities and Exchange Commission. While most crypto community members support the leading blockchain company, some crypto stakeholders, like Ethereum co-founder Vitalik Buterin and MicroStrategy CEO Saylor, have refused to throw their weight behind Ripple. In a recent PBD podcast, MicroStrategy co-founder Michael Saylor, while commenting on the lawsuit dubbed the cryptocurrency trial of the century, said XRP is an unregistered security. According to Saylor, Ripple owns the majority of XRP coins in escrow and sells them to the general public. He added that Ripple does not disclose details about its XRP holdings because the company had not gone public. Ripple is an unregistered security. It's pretty obvious. The company owns a bunch of it, and they sell it to the general public, but they never took the company public. There are no disclosures, Saylor said. For Saylor, XRP is an unregistered security like Ethereum native cryptocurrency Ether, as a few people control both digital assets. Regarding Saylor's claim that both ETH and XRP are security, PBD host Patrick Bet David asked him to comment on why the SEC chose to target Ripple and not Ethereum. I'm not a Ripple guy, but if both of them are unregistered, why target Ripple and not target Ethereum? Saylor said the most suitable approach the SEC should take is to shut down both Ripple and Ethereum, adding that they are unethical. I think the best thing for the world would be if the SEC pretty much shut down all of it. It's all unethical, Saylor was quoted as saying. The former CEO of MicroStrategy, accused of tax evasion in August, said XRP and ETH are equity tokens Ripple and Ethereum used to get around going public. He noted that both companies committed securities fraud via their offerings in the United States. Saylor referred to the Ethereum 2.0 staking contract as the definition of an investment contract. Per MicroStrategy co-founder, over $20 worth of ETH is locked in the staking contract by investors, and there is a tendency that these investors may not get their funds back. Data from the crypto analytics platform Dune Analysis show that investors have sent 15,540,823 ETH to ETH 2.0 staking contract. If a bank took $20 of your assets, froze the window, and said you can't have your money back ever, maybe in 2024, but we're not sure. We may give you interest in it. We may take it all. We may slash it. That's the definition of security, right? It's an investment of money in a common enterprise, relying upon the efforts of others with an expectation of profit, he added. Per Saylor, for a crypto asset to be a commodity, it does not have to rely on a company's engineers or a CEO. The fact is, Ripple got a company, and Ethereum's got a company, the Ethereum Foundation. Have engineers, you're waiting on them to write the code to give you your money back, and then you're also waiting to find out what the monetary policy will be. They changed it half a dozen times in the last 6 years. It's always changing to you, he said. Meanwhile, Saylor is a known Bitcoin maxi and has always described the top asset class as an ethical coin capable of reimbursing investors robbed by inflation. Recall that the SEC charged Ripple in December 2020 for allegedly offering unregistered securities in the United States. The case has lingered for more than a year. The parties have filed their summary judgment motions, opposition, and replies, with XRP investors hoping for a victory in favor of the crypto asset. Jim Cramer is an American TV personality and host of the Mad Money Show on CNBC. Cramer urged investors on December 5 to sell their crypto holdings before it is too late. The millionaire believes top cryptocurrencies like Ripple, Cardano, Polygon, and Dogecoin could collapse to $0 soon. Jim Cramer, an American TV personality with a net worth of $150 million, is the host of CNBC's show Mad Money. Cramer advised investors to sell their crypto holdings while there is time to exit the market. The millionaire believes that markets could plunge in 2023, and digital assets could plummet to $0. Cramer was quoted as saying, "You can't just beat yourself up and say, hey, it's too late to sell. The truth is, it's never too late to sell an awful position. And that's what you have if you own these so-called digital assets." Cramer told investors that it's never too late to sell cryptocurrency and jump ship while prices are still considered high. Cramer's take is that speculative assets could decline as the U.S. Federal Reserve continues tightening its monetary policy. Tightening of monetary policy is implemented when the central bank is fighting rising inflation. When monetary policy is tightened, interest rates are increased by the central bank and money supply is reduced. Investors pull out of risk assets like Bitcoin and altcoins in response to the Fed's measures. Cramer named cryptocurrencies like XRP, Cardano, Matic, and Dogecoin and said they could plummet to $0 in the upcoming recession. The Mad Money host warned investors against staying in speculative assets and said that investors shouldn't be fooled by some coins' inflated market capitalization. Cramer criticized Tether, a stablecoin with a market capitalization of $65.57 billion. The millionaire TV personality said, Tether, a so-called stablecoin that's supposed to be kinda sorta pegged to the dollar, still has a $65 billion market cap. There's still a whole industry of crypto boosters trying desperately to keep all of these things up in the air. Not too different from what happened with bad stocks during the dot-com collapse. We would like to make it clear that this is not a platform designed expressly to offer financial advice, and we are not requesting that you invest in any particular business. This is just a route used to deliver instructional material to your door. See you again soon on XRP Insider, the leading source for cryptocurrency news.